Welcome everyone. We are back with our last session for today evening, which is a panel discussion on drawing the analogy between the 2020 DeFi boom with the 2017 ICO boom. So for this, the moderator for the panel is Opinder Preet Singh, who is a team member and an active person in the Indian ecosystem and a dear friend. He has earlier co-founded a company called That Tips, which was anonymous tipping system where you could anonymously talk about any of the crime that is happening in your space. And now he's the co-founder and is running a crypto trading platform called KoinFox. For this panel, the panelists are Ashish, Pascal, and Alex. So you already know who Ashish and Pascal are. Alex is the co-founder of Rivex, which is working on bridging the gap between the world assets with the DeFi world. Before starting this company, he was working as a sports engineer with multinational companies, and his passion for this technology made him, start the Rivex company. So over to you, Upinder, and then you can take around with introducing this.
Thanks a lot, Manav, for introducing everyone and inviting me for hosting this panel discussion, and welcome everyone for joining this panel discussion. Hi Ashish, hi Pascal and Alex for coming here. So I hope we will have good time talking to all of you. Since this DeFi space is going very crazy right now, everybody is so excited. Although I personally believe that DeFi was first introduced by Bitcoin itself, but there are certain use cases that have been implemented by some recent projects which have been possible through the advent of Ethereum. So I welcome you all, and I first of all want to know from all of you, it's more of a personal question, like how if you can tell about your story, like how you got into this crypto space, how you got into this, then how you got introduced with DeFi space, and so why do you think that DeFi seems interesting, rather than normal crypto blockchain narrative? So maybe we can start with Ashish Suvarna.
Thanks, Opinder. So it's actually a funny story. I first found out about Bitcoin in 2012. I was visiting my granny, and there in the local TV channel, there was a documentary on Bitcoin. So I was like, okay, what is this Bitcoin? I was in college back then. So I started reading about Bitcoin and also tried to mine Bitcoin in my computer, which was it had about 256 GB of RAM. Sorry, 256 GB of hard disk and maybe 5. It's a very, very old computer, and I tried to download the whole Bitcoin blockchain back then in 2012. And then I lost touch. I got into, I did my engineering. I got into development in IT, and then recently I started trading in the stock markets. So the problem was the stock markets are not open 24/7, right? So I could not tackle trading the stock markets while holding a proper full-time development job. So it's like, okay, what is my alternative? I then came upon commodity markets, and then after the commodities markets, I discovered crypto. So I was like, okay, crypto markets are open 24/7. This is interesting. So that is how I started my proper crypto journey in 2017, right before the bull run. So okay. Yeah, that's what I actually got into crypto. Then I started working for a crypto exchange. I used to write for them, and then recently I joined FTX in March and have been working with them since.
Okay, interesting. I will come back to you later on asking about what exactly you're doing with FTX and Project Serum. Yeah. So what about Pascal? How about you?
Hey guys. Me, I was trading traditional financial markets since 2007 or 8. And then in 2016, I was doing a bit of IT. We were developing an algorithm for market making because we have a prop trading firm. So we are backing traders and managing their risks. And then we started to do an interface. And then when someone spoke about spoke about I don't remember actually which crypto was it. Dash spoke about Dash, and I was like, I don't know, cryptocurrency, never heard about it. I mean, barely. But finally, since he insisted, almost harassed me at the beginning of 2017, I started to look after it, and I was like, yeah, it's cool actually. And so the first thing we did, it was to plug our trading interface, which was working with traditional brokers, with Poloniex using the API. And so the idea was to have a trading platform where you can trade both, normal assets and crypto. And then there was the ICO craze. So of course, like everyone, I was like, wow, I will throw my money everywhere. And it was a funny market because you could buy anything and make money. Back then, I made money on Ripple. I mean, so yeah, this is how I started. And then at the beginning of 2019, I started to wonder what I can do with my assets, and this is how I found out about Compound, which was my first DeFi protocol. Then some days after that, I found a group on Telegram, DeFi. There was 300 guys, and then this is how I started to be in love with DeFi. And since then, I'm all in this environment, and voila.
So did you farm anything in Compound?
Yeah, of course. I started farming actually on synthetics, of course, using the IETH strategy. So I have IETH, and then I am hedged on FTX actually. So I open. I mean, back then FTX didn't exist, so I was just using normal ETH. But then now I'm hedging on futures. I'm long on futures and I'm short using IETH. Then I started to farm Balancer BAL token, then Compound and YFI, and this summer was actually very crazy. It's the first time I think I don't take holidays because of that, and yeah, it was every day, maybe 6 hours per day I was farming. So yeah, it was pretty cool.
Are you farming anything today, like these days?
Yeah, today
for us.
So, but as of today, I'm still farming SNX. I'm still farming sushi on some tokens that I have. I was farming Surf token until yesterday. Holy token also. It's a UK startup doing a wallet with debit card and so on. What else I'm farming? Pickle and I think and of course Curve token, and that's all.
I will come back to you on this particular topic because there are some key questions which need to be cleared out, to the audience, because I don't want that everybody get to farming without knowing certain key takeaways, because there is a chance that their money can be wiped out from those smart contracts. Yeah, so we can talk about that later on. So how about Alex? How about you?
Yeah, hi. So hi everyone, I'm Alex. So basically for me personally, right, I think I actually I know about crypto when I was starting out scalping Forex market. Okay. At that time, right, basically I know about this word called Bitcoin, and then was getting curious, and then tried to read about it, tried to research a bit. Then after that, the Mt. Gox issue happened. That was like in 20 plus. So basically, at the time I thought, okay, so I never dive in, so probably this is a scam, and then I just leave it. I just leave it aside. Basically, never touch it anymore. Then after that, I think early 2017, there's a project called NAM. They organized a meetup locally in my home country, Malaysia. So that was when I actually attended a meetup, and then it got me actually started off again to understand the whole blockchain scene. And then eventually I came across Ethereum, and then know about smart contract, what's the capability. And then at that time I was actually like just testing out as a hobby, testing out, developing on all these ecosystem. Rarely I actually participate in all the ICO actually. It's just a handful of ICO project that I actually participated. And then during the 2017 ICO boom, and then the crash on the early 2018, right? Then basically I think mid of 2019, me and my partner, another co-founder of Rivex, right, basically decided to start our own project, trying to see what we can do to actually help to mature the ecosystem. And then subsequently, right, entering I think early 2020, right, the DeFi craze actually starts happening, and then we actually Rivex actually dive into this pillar as well.
And interesting, yeah. So, like as I have listened from all of you, so I think everyone have experienced ICO craze back in 2017, right? So, like, what similarities that you find out, between that ICO craze and today DeFi craze, and what are the differences as well? So, maybe we can start from Pascal. So, like similarities of ICO with DeFi craze and differences also.
Yeah, so I won't give all the arguments to leave the other speak. So I will just focus on one. Of course, apart from the bubble, I think it's the biggest similarity for me was all the scam actually, because in 2017 we started genuinely like it was for funding cool project with cool ideas, and for DeFi it was the same. And then when people started to see that all the tokens were skyrocketing, you started to have a lot of scam. And then people who were not very into crypto, who didn't know about the projects that they were investing in, but they were just throwing money on it. And yeah, unfortunately, it's the same pattern, but you have the same every time. When you have a binary option that popped up in the traditional finance, when you have like 2 years or 3 years ago, you had a lot of scam for diamond, gold, and so on. So yeah, this will be the first thing that I noticed. And actually, this was my sell signal. Like when I started to see a lot of scam on Uniswap, I was like, okay, it's like 2017, so I sold 50% of all my DeFi token this summer because of that. It was not the top, but it was when I saw this similarity, I was like, it will be same pattern, same consequences. So I prefer to get out.
Mm-hmm. So, what about you, Ashish? What do you think? Like, what are the similarities?
So I joined crypto like right when the 2017 ICO boom was going on. So I did not actually put money in any of the ICOs, but I think like Pascal mentioned, a lot of similarities are a lot of scams. But there is a difference. Like in 2017 there were a lot of good projects as well, and right now also we have a lot of good projects, but they somehow get mixed in the noise, and people are not able to filter which projects are good and which projects are bad. So you might end up putting a lot of money in a project which turns out to be a scam, and you might not end up investing in something that is actually a legit project with a good potential. So I cannot really compare with the 2017 ICO boom because I was not actually, actively trading in the markets. So, but yeah, like Pascal said, it's a good thing that you did. Pascal sold, like not at the top, at least at a good price.
Absolutely, yes. In fact, I was also about to come at this point that there are some good projects which could not even get could not even raise the sufficient amount of funding, and they could not sustain. And there were some projects which were able to raise a lot of funding, and they ended up dumping on their investors or users. So this is usually seen. This was seen during that 2017 ICO craze, and I have seen this happening in this DeFi craze as well. But this time it was very fast. It was like in just few weeks. It was not that quick during that ICO craze, I believe. So maybe Alex can point out other similarities apart from what Pascal said. Do you think any other similarities of DeFi and ICO craze is there apart from this that Pascal told, or you think this is the only similarity that you find?
To me, basically, I think I have to agree with what Pascal and Ashish mentioned, the scam that's happening. But even in centralized kind of solution or platform or ecosystem, right, you are seeing scam everywhere as well. So to me, right, there's another, I think, similarity, if you were to ask me, right, which is the part where, from speculation perspective, basically, if you want to make money, you have to be quick. The similarity between the 2017 ICO craze and the DeFi craze 2020, right, is basically this one. But that is actually from the speculation perspective. But if you ask me, right, from a utility or crypto or decentralized ledger technology kind of ecosystem perspective, right, I would say that there is no similarity because, right, reason I'm saying that is because if you notice, right, 2017 ICO craze, right, basically people are investing, right, into a white paper, into an idea. So basically at that particular time, right, you are seeing that a lot of people are actually like coming out with all sort of idea, coming out with all sort of chain, but there is no utility. But for this 2020 DeFi craze, right, you can see that there is real utility on all these platforms, which actually helps to mature the ecosystem. So you are seeing all these platforms, right, where they are coming out with utility first before you start investing in it. But on 2017, right, basically people are just coming out with ideas, writing out ideas in white paper, and people are just FOMOing into a white paper kind of ideas only. So basically, those are fund that you provide to a project at that particular moment versus fund that you actually provide to liquidity at this current craze. That's what I'm actually that's what I feel basically.
But during this DeFi craze, most of the projects were focused on, lucrative farming yields instead of providing any other product. As you are saying that, this time DeFi projects had some working product. I think there was no other product other than, that they could farm the tokens. So what do you think, like, because this DeFi craze was solely based on, like, you farm the tokens and dump to get free money. So if this farming could not have been there, then what other products could have been there? I could not see the potential products. Most of the projects started using DeFi as a buzzword, but there were no products available. They were still white paper, but they were what they were giving as a working initial working product, just a farming product where people could simply lock them funds and they could farm the tokens, and they could hope that but specifically this project will work. Like if we take an example of Curve Finance, right? Curve is a good product. Like they built out, they solved some good problem, right? If we talk about this other lending products, right, or synthetics products, they are solving some problem. But most of these products, do you think that that the tokenomics play an important role in the dumping or pumping of the token? Like if I take an example, Yuan Finance, Wi-Fi token inflation was very short-lived. It immediately the complete token supply came out in the market. So whoever was able to participate or was able to find out that opportunity, they were able to farm a lot of tokens. And at the same time, projects like Curve Finance or Uniswap, they are still releasing their tokens through liquidity mining. So and that is becoming the reason of their token being dumped upon the market. What do you think? Like since you all have a background in trading, how much tokenomics matter here for the pumping and dumping of the tokens? Because people talk, okay, Uniswap is a good project on a fundamental level, it has a good use case, but what about the tokenomics? Doesn't it matter a lot? If the tokenomics is bad for a particular project, even if the project is good at a fundamental level, don't you think that project is going to hurt a lot of investors going forward?
I don't think token economics matter for the price, because the token economics matters for big investors who are long-term holders. So once they buy, they don't influence anymore the price, and most of the time they buy very early, sometimes even OTC, so there is no, it's not reflected on the price. The ones who are making the prices are all the moon boy, let's say, or all the people who will say, oh, this token is cool, let's buy it, but they don't really care about the token economy. You spoke about Curve as example. Me, I'm buying Curve for the cash flow, even though I know the cash flow, let's call them the dividends, may be very low in the future. Maybe it will be 5-10% per year, but I don't care because it's what I'm looking for. But people into crypto, they have a lot of they have a short-term sight. So maybe they say, why should I buy a token which will give me 10% of dividends a year, while I prefer to look for the next unicorn who will make me win 100x in the next month. So I don't think token economic at this point, when you have a bubble, matters, because this is actually why bubble are creating. Bubble is when people don't care anymore about the token economics or the fundamentals, and they just buy. And after, when they are happy with their profits, they start to cash out, and then all the people who bought during the bubble, who start to be less in profit or at break even or then at loss, they sell, and then you have the capitulation. So that's also token economics for me. It's like for the ICO in 2017. I don't know a lot of people who kept Land token as example. Land was one of the first DeFi ICO.
Yeah.
Or even SNX with the token Haven before it becomes SNX. So yeah, I think token economics are just for whales. And just to make a small analogy also, when you were saying about white paper in 2017 and now application, also in 2017 we had a lot of white paper which were just copy pastes, and this year we have a lot of DApps which are just fork, and that's all.
Yeah, a lot of forks. What about you, Alex? What do you think about it?
Yeah, so there's a mixed reaction here if you were to ask me personally. So basically, right, like what you mentioned, yield farming itself, right? Basically, I don't see it as a sustainable way. So like what you mentioned, it's just an inflating of token supply into the ecosystem, right, into circulation, right, and then on speculation perspective, then it'll be a dump of price, and then people will just community will start to like just move on from the project itself.
Right,
Okay.
absolutely.
Yeah. So that's why I think even on the 2017 as well as this 2020 DeFi craze, right, a lot of projects or even platforms, right, they come up with tokens, right, that never actually matches with the token economy, basically, because there is platforms, right, where there is real utility but without a need of tokens one, actually, because right now you're seeing this 2020 DeFi boom, right, is actually fueled by all this yield farming project. Okay, and then all these yield farming project, when they actually comes up with a token, right, basically they call the token as a governance token. Okay, so basically there's a mixed reaction here. There may be a part of it that requires these governance tokens to exist for helping this platform to scale, but if all these yield farming projects keep forking out a new governance tokens, right, basically it will be like the 2017 kind of project that was released on 2017. Basically, it will be a dumping ground, and then there will be forced back holders, and then there will be no real utility. So that's why, like what I mentioned, right, all these platforms that will survive past this DeFi craze or DeFi boom, right, they will be the winner at the end of the day, because right, they are actually putting real utility into the ecosystem itself.
Because what I have seen personally, that the projects like Yearn Finance or DeFi, the DeFi money like Wi-Fi 2, so their so token supply came into the market immediately, right? And after that, there were no new tokens to be released, and now the sell pressure was not there, right? But when we talk about the projects like KoinFox, the sell pressure is a lot. It's
Correct.
immense, right? So that a lot of new investors, noobs, whom we call, right, the new investors who are entering into the market, they buy with this fundamental idea that Uniswap is a good project, right? But at the same time, if the inflation is very high, then that price is definitely going to go in the downturn. Same happened with SushiSwap as well, right? So I personally feel the tokenomics play an important role. What do you think, Ashish? I think Project Serum also has a similar fundamental here, that the Serum tokens, a lot of Serum tokens are going to release in the future. So how the tokenomics play an important role. Even like sometimes like project is very good, the team is very good, but I personally find sometimes that they maybe did not give a proper attention on tokenomics. If the tokenomics would have been better, then probably it could benefit every possible person who was connected to their community.
So I personally think that tokenomics mattered to some extent, but I mean, with respect to Serum, right? So we have about, I think, total of 10 billion tokens, out of which 90% of it is locked for 7 years, right? So even the seed investors will not be able to sell it for a period of 7 years. So it's basically a linear unlock starting from year 2. So I think people do not understand the difference between unlocked and circulating. So it does not mean that if some tokens are unlocking, they're directly coming into the circulating supply. They are there to be used for the say for the ecosystem or for some other expenses, but they're not directly hitting the market right away, right? So when you see other projects like Alex and Pascal mentioned, right? Most projects they do not think about tokenomics and they just launch a token and then they basically their utility is just to yield farm and then basically dump their tokens on whatever, right? So for these projects, tokenomics do not matter. But I think on the overall side of things, tokenomics do play a certain part because when you see retail traders, right, they ask these questions like, okay, what is the total supply? What is the circulating supply? They'll go on CoinGecko and see what is the market cap, what is happening in the, in the space. And like there are some coins which have, like you do not know the market supply. I mean, you don't know the hard cap of the tokens, and there is a market cap, but it is not sure. So the pricing of it is not very consistent throughout exchanges. So recently, I think FTX listed Phil, and the pricing was all over the place. Like Binance had another price, FTX had another price, and a lot of exchanges had. So there were a lot of arbitrage opportunities as well. But proper tokenomics help, I think, price discovery in a certain market.
Right. So you were talking, you guys were mentioning about the governance tokens. So what you guys think that governance tokens can play an important role in the DeFi space? Maybe it. So do you think that these governance tokens, or the tokenomics of these governance tokens will eventually be able to distribute the tokens among larger amount of community who is still not I think confident enough to hold these tokens for long term? So how the governance is going to play for those particular projects? Because if the majority of token holders are not going to stick to the to those particular projects, then maybe there will be a security loopholes that which can be compromised, right? So what do you think about this? Like how the governance tokens are actually matter a lot along with the tokenomics, or how the governance tokens are going to solve? Because before this DeFi craze, there was not much talking or work on the governance tokens or DAO space otherwise.
So governance token, it's very complicated because it's basically democracy. So we don't need to analyze how governance token works to know if it will work or not. We just have to see in history how big corporation are working, how empires were built. And the thing is that if you want to build something, it's always easier, apart from some very specific cases like maybe Wi-Fi. But you always need a leadership, you always need charisma, and you need some kind of dictatorship. I mean, a big company is managed by few key people, smart people most of the time, and so on and so on. Usually democracy, it's when everything is okay, everything is shipped, and now you can give the governance. It's what Aave has done. Aave, they have built everything under the leadership of Stani and Jordan, and now they have a product, they have users, they have a steady growth. So now that it's okay, they can delegate to the community. So this is the first thing. So I think governance should be very smooth. Like you have to bootstrap your project, and after you can give the governance to people. But after you have the problem of the wealth, I will not give all the example to so maybe Alex and Ashish wants to speak of it, but we saw very recently the flash loan maker. We saw this summer one whale on Curve who over one night changed the rate for the compound pool. So the problem is that it's like in democracy, not a lot of people will participate. And at the end of the day, it's always the one who has the most token who can basically decide what is the best for their own interest and so on. So I like governance tokens, but somehow I still wait to see if on the long term it will work basically.
Okay, which one do you think, like which projects should be looked upon for the potential governance tokens as a benchmark so far, which are available?
So the compound governance mode is used in many projects, but personally, I like a lot the curve system where you have to lock token for a certain amount of time, up to 4 years. And I think it's pretty cool because you were mentioning before token economic, like the 7 years lock for Serum. So even though the market is not very, as Ashish said, people still don't understand that, but actually a lock is something good. But still, me, I find it quite bullish because it shows that, again, the people who are mainly whales or people who really invest for the project, they're okay to lock their token for 4 years. Me, I locked my curve for 4 years because I have full trust in the project. And I know that we are just at the beginning and that curve, like Uniswap, will be one of the key players there. So I don't care to lock my token for 4 years. So this is the model I prefer because it's really only make participate the one who believes in the project.
Alex, like you are there since I think been around 8 years, right, in this space. So you are in this space since last 8 years, right? So
I think close to it.
Close to it. So you very well understand, the governance of Bitcoin as well. Like it's one of the most successful governance models out there, right? So, like, what do you think? Like, whether the current governance models which are coming on tokens which are created on top of any infrastructure blockchain like Ethereum, are they going to be sustainable, or the kind of governance that was created by Bitcoin or if that kind of governance is still one of the most successful use case for the governance tokens? So what is the future that do you think that can what we can look upon in the future? Will there be any combination of both, or maybe or proof of work is thing of a past?
Yeah. So to me, right, Bitcoin itself, right, is not more. It isn't a governance token. Basically, it's a store of value. What Bitcoin introduced, right, is actually a store of value, and then out came Ethereum, right, where it actually acts as a transaction and also as an innovation. And then basically, Ethereum and smart contract actually give birth to all these governance token. So basically, to me, right, a governance token itself, right, will only succeed, right, if it actually do its part, right, to actually govern the platform itself. Okay, so let's say, for example, right now, right, a lot of people are just a lot of projects are coming out with governance token, but the community that are actually interested in this token, right, they are interested in the speculative elements. Okay, they are not interested in really utilizing it as a governance token. Okay, so basically, for a platform to grow, for a platform to scale itself, right, we need all these governance tokens holders, right, to actually do their part in really voting, in really coming up with proposals, right, that will actually help scale this platform, help beautify, help perfect this particular platform, or even the ecosystem in general. Okay, so for them to actually, so basically, there's also another point to it, whereby if you want governance token holders, right, to be actively participating in all these proposal, all this voting, right, you need to come up with another reward system to actually rewards them, but not in the sense of like all these yield farming craze where you're giving like super high kind of yield to them just because you want them to stake the governance token. Because if you're actually doing this, right, you are just fostering all these holders, right, to actually stake their governance token into somewhere which doesn't do any good to your platform, to your project, or to the ecosystem itself. So that's what I'm actually looking at.
Okay, and what do you think, Ashish? And adding another question into this, like what kind of governance model is planned for Project Serum also in the future?
Right. So yeah, I think like Alice mentioned, right, this is more of a community thing. Like governance token is useful when a significant part of the community that believes in the project trades it and uses it for governance activities. And for Serum as well, I think like even to stake Serum, you can stake Serum towards the node and use it. You basically you can use the rights of the node to vote on the direction of the project. So I'm not sure about perfect plans for. I'm not sure if there are perfect plans for governance in Serum as yet. But yeah, I think there should be coming out something soon. Yeah.
Okay. So So what do you think can be a next, hype cycle apart from, this, DeFi space that can come in the, near future or maybe, distant future? So, DeFi craze is completely different from that infrastructure craze that happened in 2018-17, right? Then, it's completely different from the, different ICOs craze, that happened in 2017. And so what do you think can be a next hype cycle apart from NFT?
For me, it's trading. I mean, most of the people, they come in crypto for trading, for the money. And what we see and what I see, it's many people who used to trade on centralized exchange. They are now moving to decentralized exchange. I guess, Alex, you can speak a lot about layer 2, and I also see a lot of people trading on centralized exchange who are saying, yeah, now we are moving, and since layer 2 are really here, now there start to be less points trading on centralized exchange. So for me, everything related to trading, so synthetic assets, Uniswap, basically AMM, and liquidity, it's not the new stuff because it's already existing, but I will bet more on that rather than other things, and of course infrastructure like layer 2, but they need to have a good token economics.
Okay, I actually, this point came to my mind now that, like a lot of people are bullish about the decentralized trading, through this DeFi products. But, the fees is still a major problem in Ethereum. And the problem with other infrastructures like, which are coming up with similar solutions, that they are still not able to, attract these investors or traders, or the community people, on their own platform. Like a lot of different infrastructure projects are attempting even to bridge Ethereum, right? So to generate that volume. So what do you think that, that can be a, ice breaking, point where the users will start flowing to other infrastructures also? Because I personally feel if one has to buy a large chunk of Ethereum today, or if one has to buy, or to make any big transaction fees is still a big issue, right? And even Uniswap is also charging a lot of hefty fees today. So maybe we can start from, I think, Ashish here.
I think like people flock up where where the majority is, right? Like Uniswap is on top because everybody's on Uniswap, and it's like a cascading effect that we see. So I think Ethereum has been around for a long time, and people are aware of MetaMask. People are aware of Uniswap. They know how to use it. So when Uniswap fork came out, like Sushi Swap, people were more than eager to use Sushi as well because it was very similar to Uniswap, and it was like quite easy, right? And people, Ethereum has been around for a long amount of time, and people trust Ethereum, and they have some Ethereum at least lying around in their wallets. So it is, I think it's easier for them to log on to Uniswap, connect their MetaMask, and do some transactions. So something like a connection to MetaMask to another platform or a protocol where you can easily transfer funds there, and you do not have to. There should not be a lot of hassle for people to trade, basically. So that is what I think Serum also has tried to do something similar. We have a solid wallet where you can, if you have any, for example, Wi-Fi ERC20, you can convert into the SPL version, and then you can trade it on the DEX, or you can swap it or anything like that. So it is, the pool and the swap UI that you see is more or less similar to Uniswap. So if users are used to the platform, so they'll be able to trade it easily, is what I think.
Okay, Lex.
Yeah. So to me, right, basically, I think the importance of layer 2 infrastructure, right, is very important right now. So in the sense, like, I think project like even Serum, right, be on top of Solana blockchain, right, is actually doing their role, doing their part, right, in actually helping fostering this kind of adoption. Even the home for India homegrown Matic network is also another layer 2 project that's actually very well built, very well thought of, that can actually help foster the adoption rate to actually cross the traditional kind of business over to here. So even like for us, right, in Rivex itself, right, because our aim, right, is to actually bridge real world assets, okay, to the world of DeFi. Okay, so that's why, right, we are also right now trying to balance out, right, the need of decentralized and centralized, right, trying to foster, like, if you want to foster like real traditional kind of business into the decentralized ecosystem itself, right, it means you want to bridge the two into each other's, right, you need to have a way between these two solution itself. So that's why on our end here, right, we are trying to come up with this solution whereby real world assets can be can actually benefit from all these from this current DeFi kind of ideas. Okay, basically, like if I give you an example, right now the yield farming craze is all on inflating the token, but the next step itself, right, for us, right, we are trying to bridge all these real world assets, okay, into coming up with farming for revenue instead of farming for additional tokens to be circulating on the ecosystem itself. Okay, so that's what I'm actually looking. That's what I'm actually seeing.
Okay, so CZ recently came up with this term called CDFI. So like when he tried to merge this CFI and DeFi narrative. So Pascal, what do you think? This, by the way, this is the last question. We will take up the questions from audience after this. So Pascal, what do you think? Like, is this actually going to be is it going to solve and bring or maybe remove the friction of user experience on DeFi, that if CDFI is or if CDFI is actually possible or not? What do you think about this?
Yeah, just before that, for the fees, apart from the farming period, which increase a lot the fees, actually, I do genuinely think that trading on DEX is cheaper than SEX for one reason. If you want to be, let's say high frequency trading or scalping, since Alex mentioned scalping before, just use a central exchange. But if you just want to swap token, exchange token, it's cheaper on Uniswap or even Paraswap. I run some comparison between just Binance and Paraswap, which is a DEX aggregator, and most of the time they have exactly the same price by counting everything, fees and so on. But the difference with a central exchange is that you have to send the crypto, you have to wait the time, X block, then you have to trade, then you have to make also the QAC and so on. While on decentralized exchange, you go, you connect, boom, you exchange. So actually, it's maybe way cheaper. The difference is that people, they don't do basic calculations sometimes, and they say, but the fees are here and that, so it's super expensive. But if they really look at the price, the spread on central exchange plus the fees, like when you have 0.2% of fees on Kraken, as example, when you do the math, but you end up seeing that actually decentralized exchange are actually quite cheaper. And for the CDFI, me, I'm one of the maybe very few advocates in the DeFi space. I know that a lot of my colleagues, they are, what is this? No, let's CFI, DeFi. But as you say, it will ease user experience. And like that, it can allow protocol like us to only focus on security and attracting liquidity. And then we delegate the interface to centralized exchange. And for me, it's one of the biggest future trends, where you go on Binance, FTX, or Huobi, and you say, hey, I want to lend my funds in Aave, and you do it directly from the exchange wallet. So me, I'm quite bullish on that. It will also solve some regulatory issue, because centralized exchange, they will have the burden and the liability of doing the KYC and AML, and us, protocols, we can say, hey, we don't need anymore to check those funds, because AML in DeFi will be in a moment a big problem. So maybe if we team up with CFI, we can grow all.
Okay, interesting. So I think we can take up the questions from audience now. So if anyone wants to post their questions, they can still post. One of the questions is that there is a news that Uni V3 could be on layer 2. How do you guys see this kind of move? Who would like to answer this question? Like Uniswap maybe coming up with the version 3 on maybe on layer 2. So will that accelerate the adoption? So and like I think it is. We were talking about the CDFI thing. I think it will this if Uniswap comes on layer 2, and it will it may be solving a problem of fees also. So will this be killing the narrative of CDFI, or CDFI will still be a thing? What do you think about this Uniswap version 3?
For me, it's good, of course, but we don't have to forget that one of the big points of Uniswap is the composability. Some decentralized exchange like Blue, Dex.Blue, they tap into the liquidity of Uniswap directly. So the only thing is, okay, layer 2, but will there be composability? Will it be possible for a centralized exchange or decentralized exchange to tap into the liquidity of V3? It's my only concern. Apart from that, of course, I would like to test something like that to see if it brings value.
I think composability. Yeah. Please continue. Please.
Yeah, no, I mean, like, I think, like, in general, right, it is actually beneficial to the whole ecosystem itself. But, like, from me, right, from a technical perspective, right, there will need to be a lot of testing involved, because you're actually touching liquidity providers over here. So, like what Pascal mentioned, the composability, all these factors, right, needs to come into play on this side here.
So, like, the composability is a big issue, like especially on other infrastructures or layer 2, where not other projects are there. So that's why the adoption may not be coming. So next question is: in 2017, ICO, FOMO, and crash, legit projects were forced to sell off their ETH reserves because of price crash, lowering it more. Anyone can tell to audience why to invest in DeFi projects right now in a long-term scale? Who would like to answer this?
So first, it's a good question, and it's true. But the difference again is this year we have application. But why to invest in DeFi? The thesis that we support is the following: DeFi will not eat CeFi. For me, they will coexist. It means that the narrative that DeFi will become bigger than CeFi, I don't buy it. It's not possible with regulation and this kind of thing. But it can really become huge. So the thing is that, do you want to be part of something that will worth billions? And even though if we don't kill TradFi, CeFi, whatever, it will still be a huge market share. And DeFi also address area that TradFi, so TradFi or DeFi, CeFi cannot address. For example, many markets, let's say in Africa, some countries in Southeast Asia or China, whatever, or America Latina. So DeFi is here to stay. DeFi will fill some gaps, and DeFi will grow and will become a very trustable and reliable alternative to CeFi for many people, many traders, also many investors. So why invest in DeFi now? It's just because it's basically you invest in a new financial system. It's like if I ask you, hey, do you want to invest in banks in the 16th or 17th century? But now everything will be faster, so we may reach the maturity of DeFi in 2, 3, 4 years. So this is basically the thesis that we are telling to everyone. Just if you want your wealth to grow, you need your wealth to be half in the real world and half in the digital world. And the only way to grow your wealth in the digital world is to be in DeFi and to use DeFi projects.
And one follow-up question, I think I will ask this question from Ashish. Like, as Pascal said that if you want to hold your wealth, it has to be in digital form, right? And it can only be in DeFi when it's in a non-custodial format. But the main issue, is with the wallets where we, hold our assets. And, moreover, if we want to, let's say, use those assets in farming, some other projects, DeFi projects for possible tokens against that. What do you think can be the main parameters, which should be, analyzed or or checked by any normal investor, right? Who is going to lock their amount in the DeFi projects, so that they don't get rug pulled. I would say rug pull is a proper word, here, that their funds don't get wiped out from those smart contracts. Either it can be a bug in that smart contract, or it can be a deliberate intentional rug pull by the developers of those smart contracts, right? So what do you think can be the key parameters which should be in mind of every investor, before locking their money for farming or participating into farming of these DeFi projects?
Yeah, I mean, it is impossible to tell who is going to rug pull until that point it happens, right? So I think if people are going to put their money in any project, they would probably have to do a bit of research on who is backing the project, what is the team that is working behind the project. Do they have a history of creating good projects, or have they created this product of thin air? Like there are a lot of projects who just navigate themselves to DeFi because it is a DeFi boom. So is there a particular use case that they're actually working on? Do they actually have a working product without bugs? Is it audited? So I think it depends on ultimately it's on the investor, right? They have to do their research, and they have to ask other people, they have to ask veterans in the industry, maybe ask them on Twitter, directly send them a DM saying, okay, is this project good? Most likely they won't respond, but I mean it's entirely up to the investors. They have to understand what the mentality is, or like, you could be rug pulled anytime in any project, you can never say. I mean, nothing is forever. So
but don't you think from this perspective, CeFi is much safer place to play?
There can be rug pulls in CeFi also, right? I mean, there are exchanges get hacked every day. There is a possibility of this happening in CeFi as well. So I don't think you can, until the fact that something like this happens, it is quite hard to tell. I mean, there are several red flags in this where people can understand beforehand, okay, something bad is going to happen. So keep your eyes open and do your own research is what I'd say.
Alex, one last question for you here. I think this one is very important. I think this is a problem that still exists in automated market makers space, that impermanent loss. Everybody knows about this, right? So though liquidity providers, they are locking their funds in Uniswap and other AMMs, but this problem of impermanent loss still persists. Although one project, I forgot the name of that project recently, they have attempted to solve this problem, but I think it's still in a very nascent stage. What do you think from your experience that how this problem can be solved, or even if till the time problem is not solved, how a liquidity provider can still save their funds from experiencing a particular loss and I mean, what kind of scenarios should be there for them when they should decide that they should provide the liquidity, and when they should decide that they should pull out the liquidity so that they don't experience this impermanent loss?
Yeah. So to me personally, on this question, right? In regards to impermanent loss, right? I think there isn't really a very good answer that can be provided. So basically, right? This will actually, if we roll back a bit, right? Then how to actually determine if one user should be actually providing liquidity in the first place? Okay. So basically, like what Ashish mentioned earlier, the projects cannot be anonymous, because anonymous team project, right? Basically, you will not be able to hold anyone accountable or responsible to any rug pull or to impermanent loss really. But in terms of and then the next one is the project, whether you are seeing this project can run long term, or it's just another like those yield farming kind of food or farm or food token, right, where they keep inflating, right? Basically, people are getting the earlier people are getting much more token compared to the later stage people, right? So basically, it will be a dumping ground. And then if you're providing liquidity to the liquidity pool at that particular moments, right, high chances are you will be getting impermanent loss. All right. So basically, there's really no situation, right, whereby you can really run off from this. If you are actually providing liquidity, right, to a token, right, basically you need to keep monitoring the value, the price of the token itself. Okay, because there's really no way where one can actually helps in terms of impermanent loss. I think I came across an article or that Balancer is actually working with the AMPL, the Amperforth team, right, in trying to reduce or mitigate this impermanent loss issue, whereby they want the whole liquidity pool, right, to actually rebase. Okay, but I'm not sure what is the status of the development right now. But I have not dived in deeper, much deeper into that particular research as well, so I don't really understand. But to be very frankly to tell you, right, no one else can actually control this impermanent loss besides the user themselves, the one that actually provides the liquidity. The person will need to monitor the value of the token itself and then pull out before if they are not able to sustain that kind of loss. So that's my answer to that.
What do you think, Pascal? Can be the possible strategies to
So first, sorry. Yeah, no, I'm agree with Alex. It belongs to the liquidity provider to check when the fees collected are lower than the impermanent loss, and maybe someone will do an automated tool to do it. But yeah, so the project we are mentioning was Bancor. So basically, they don't solve impermanent loss. They just have an insurance. So if you lock your liquidity for 100 days, after 100 days, they will issue BNT in order to reimburse the impermanent loss that you may have suffered. So no, mathematically, there is no possible way to solve impermanent loss. It's mathematically impossible. So the only way to solve it is just to to reimburse people or with farming. There is one way that can work. It's when you provide liquidity on low volatile assets. So as example, on our case in Jarvis, we mainly focus on fiat currency. And on Kovan, we have now a Euro USDC pool. Since we know that Euro dollar, GBP USD, most of the Forex pair against dollar, they don't vary from more than 15% per year. It's very rare. You know that the impermanent loss for 15% movements, I don't know, maybe 0.3%. So for 1 year of liquidity, if you don't win more than 0.3% of fee, it is barely impossible. It's the only way I see that you could beat impermanent loss. So remember that impermanent loss, you can calculate them easily with CoinGecko or Excel, but it's very big when you have a big movement. But if you have movement below 20% a year, it's not that big actually. You know, it's below 1-2% of loss, and it can really be overcome by the fees that you may earn as a liquidity provider.
Okay, what do you think, Ashish, about this? And if any attempt by Project Serum also to solve this problem of impermanent loss? Sam has talked a lot about this many times.
Yeah, I think he has spoken about this a bit. I think impermanent loss in AMMs when the price of both tokens is falling is very hard to avoid, like Alex mentioned. You have to constantly monitor what is happening in the markets. But what you could do on the other hand, if you do want to provide liquidity and if you have a bit of technical know-how, you can market make on the Project Serum DEX. So you can put limit orders on the order book actually. So you can see where your orders are and you can cancel your orders, you can modify your orders. But there is some, you need to know how APIs work, how the Solana blockchain works, and you'll know how to put and cancel orders. But yeah, I mean, that is one way I think we can avoid possibly impermanent losses.
So but maybe
just
sorry.
To add something here, market maker in an exchange example, it's more complicated for them to mitigate their losses rather than someone providing liquidity on Uniswap. You know, it's easier, let's say, and also impermanent loss are not that bad if it's part of your strategy. Like if you have a token and you want to sell your token at the market price during a movement that you anticipate being uptrend movement. You just put liquidity, and if the price of the token goes up, it sells your token, and so it can be part of your strategy. Impermanent loss are not necessarily something bad, and with Balancer, you can have strategy when the token is low. You make a pool 1090 as example, so you sell a lot of your token, and when the token is very high, you do the opposite. So like that, the impermanent loss is reduced. So it's not necessarily something bad.
Yeah, so I think there is still a need of a lot of informative videos or articles to be there to talk specifically about this and how people can, build or develop strategies to, avoid these impermanent losses. So, but all in all, I have so far, what understood with all of your talks that, we are still miles away to reach the mainstream adoption for DeFi, and there is a lot of scope and a lot of work to be done in DeFi space, which can eventually solve the problems for traditional finance and CeFi space as well. So, so by this, what do you think? Like, should be the best way to explore the space for the new folks? Like, let's end up this, panel discussion with this question. Like, what do you suggest for the new folks who are coming into this DeFi space? Like, the bull market is just, starting now, and DeFi, I think, is going to lead this bull market. So, what do you think that how they should explore this space? What should be the do's and don'ts for them? Starting from Alex, then each one of you should answer this.
Yeah. So to me, right, I think I would just advise everyone, right, don't FOMO into the market. Take time to understand, really go through article, go through all the platforms like DeFi Pulse, all these things, which actually like lists down every single tier, every single kind of different niche, right, of DeFi. Don't blindly go in because of what you hear from your friends or from your peers saying that, oh, you can make this much of money from this term called DeFi. Okay, so take time. If you don't really understand what blockchain is, take time to understand blockchain first. Okay, you don't need to understand the tech itself. You just need to understand what it is, how it works. Then understand what does this DeFi means, and then try to actually bridge it to what you understand from traditional or centralized finance, etc. But don't come in blindly just because someone or your peers tell you that you can actually earn money. Okay, and if you really have some technical background, right, do understand smart contract, because if you really need to actually put value or put something that's of value into it, right, you need to understand the how the contract works, whether the contract itself, right, like test multiple scenario to make sure that the contract itself is actually a better tester or field proof, stuff like that.
Right. What do you think, Pascal?
Yeah, to add things of what Alex said, education about the DeFi protocol. So I can only recommend the Bankless. The cube. I don't remember how he called it. Of Ryan, so of Bankless, and basically he did a very clever way, like a step-by-step guide how to become Bankless or to go into DeFi. So first you need to understand security, like how you should secure your private keys, then how to use MetaMask, for example, and then after, okay, now the easiest is to lend stablecoin on Aave or Compound. Then when you understand that, let's go to borrow. So you have to understand the liquidation system. So, step by step, and then all the rest, of course, like Alex said. I will just add something maybe a bit boring but important. It's risk and money management. If you want to be a successful trader or investor, you can rely either on luck, and it can work. Many people became immensely rich because of luck. Or if you don't have luck, you have to rely on money management, risk management. So you have to understand that to make money, you first need a capital, and when you have this capital, you need to know how to protect it. And I know it's boring, but it's what people should focus a lot on: how to protect and grow my capital.
Got it. And what do you think?
I agree with what most of Alex and Pascal said. So what worked for me when I got into crypto was, reading a lot of books. I'm not much of a video guy, so I used to read a lot of books, and that is how I used to read Andreas's books on Bitcoin and the Internet of Money. So that is how I got started. And I think in DeFi in particular, like, I think it's best if you just, I mean, this is not advice of any kind, but I'm telling you what worked for me. So I had some Ethereum in my MetaMask. I went to Uniswap and did my first trade. That is how I started learning. Like, unless you put in at least $1 in a liquidity pool, you will not understand what is a liquidity pool. I mean, even if you read it theoretically, it is better once you do it practically. You'll understand, okay, these are the workings. You get LP tokens in your MetaMask wallet. You can see it on Etherscan. So yeah, that would be my suggestion.
Yeah, awesome. This makes sense. So step-by-step learning, doing, testing out with small funds, the different parts of the DeFi space, I think, and, researching more about DeFi space, before FOMOing into, putting up any money. I think these are the three key takeaways, if anyone wants to enter into this space and, or the whole crypto space in general. So I think I thank everyone who patiently listened to this panel discussion, and I thank all of the panelists who gave up their time to discuss about the DeFi space. And I think over to you, Manav.
Thank you, Opinder. Thank you, Pascal, Ashish, and Alex, for taking out time and sharing your insights during this event. Thank you, Opinder, for taking up moderating the panel. Thank you, everyone, for being a part of the event. I hope you all enjoyed it and you learned a lot about DeFi, and some of your doubts were solved, and you have more. You can go back and start researching and understanding more about DeFi. We will be there here for some more time, so you can interact with the speakers and with Upinder, and see if you just want to learn about more about them and their companies or what they're doing. Thank you, everyone.
Thank you, guys.
Thank you, everyone.
Thanks. Everyone.